Variance analysis. Now, again, I want to use this opportunity to talk to you about variance analysis as a very general topic. I don't want you to use this particular lecture as me reading through the PowerPoint slides. So I'm going to interject what I've seen and what I use it for and why it's important, and some very distinguishing attributes of both a flexible and static budgets, what they mean in real life. I will not be reading the PowerPoints, but I will be talking to you. So I want to use this as an opportunity to talk to you a little bit about what I mean by budgets and how to direct your attention in your textbook. All of us are aware of what a budget is. Even though we may not necessarily put a budget on paper and write it down and check everything off, in our minds, we have a budget. We know the parameters in which we need to operate in terms of our own personal revenue, income stream, and also in terms of what we spend. Businesses also need budgets. A budget truly is a process by which an organization can map out what they're going to do. It is a plan. In some cases, a high-level plan of what they're going to do. In a budget, what we want to do is we want to think about, why would we prepare a budget? What information does a budget give us? And the most important thing about budgets is that it's used and it's modified and changed based on what has actually happened. So we prepare a budget, but we don't just prepare these numbers and never ever look at them again. That's not the purpose of a budget. A budget allows us to have a roadmap, and we need that roadmap to compare to what's actually happening. Did we get to where we want? So if we use this measurement or this roadmap to get to our objective, our actual is going to say, did we get to our objective? Did we meet the mark? Did we get there? And then if we did, good. If we didn't, why not? There are types of budgets. One are static budget, a budget that doesn't change. It could be a 3-month budget, it could be a 6-month budget, or it could be a year budget. But it doesn't change. It is static. It stays in place. A flexible budget does change. Based on what happened in the past 3 months, we're going to modify our budget. We're going to change the numbers a little bit, because we want our budget to reflect what we believe and what is possible for us to achieve. So, that being said, that's what we're doing in this chapter. We want a budget to adjust to different levels of activity. If we are going to increase our activity, we want our budget to change to reflect that. We want to decrease our activity. We want our budget to change that. So a flexible budget is just that. It's really going to be changing based on the level of activity that our sales in this case, that has occurred. And we want to evaluate that budget. So when we talk about budgets, we want to make certain that the budget is absolutely relevant to us. We want to make sure it's flexible and to be considering our various levels of productivity. But at the same time, however, we want to make certain that our budget is reviewed and compared with reality. That's when we talk about variances. And I won't jump into variances right now, but I do want you to understand that a budget that's flexible, that changes to levels of productivity and sales, we want to make certain that we have a guideline here. And we have something that we can measure it. How does cost behave? When we increase our activity or our production, our variable costs are going to change proportionately. Our fixed costs are going to stay the same. And remember, we talked about this in terms of our costs, how costs behave. As production increases, our variable cost is going to increase. Simple as that. And it's going to increase in proportion. We have our static changes. We have our step changes, as we talked about before. We don't see changes straight across in a very proportioned way, but it changes stepwise. And that's going to be our fixed cost stepwise changes. So how do we modify our costs? How do we track our costs, and how those costs behave? And again, we've always talked about separating our costs from direct materials and direct labor and overhead, but at the end of it all, we are budgeting to ensure that we are staying on target and that we meet our profit goals. And we use our budgets to do that. How much does it cost to create this batch? How much do we need in terms of materials in order to create this batch? How much is it going to cost for those materials? How can we budget our materials so that we can produce an X amount of product? And again, budgeting allows us to do that. Again, I would like for you to understand the whole purpose of budgets. We want a roadmap. We want to be able to guide us in our pursuit of our profitability margins in our production. We want to be able to use a flexible budget to change based on increases or decreases in production. We want to understand the role of a static budget. We want to understand how that budget is going to be compared to our actual. And we want to use that information to interpret variances. Why did we have a variance in our production? What does that mean? And how does it affect our profit? So comparing standard to actual, and again, we're touching into variances, but as I had mentioned before, budgets should be used to and assessed as to how and why we have met our budget, or why we haven't, and calculating those variances. Our budget number is 10,000 units. We only produce 5,000 units. There's a variance of 5,000. The question then becomes, why is there a variance? And not saying that variances are all bad, but variances should be quantified and explained. What caused those material price variances? What caused those quantity variances? And how does it affect? And again, with this particular chapter, it becomes a little bit more complex because of the different types of formulas that you'll need to understand. But I would say step by step, we want to know what a material quantity variance is. What is it? Before we learn how to calculate it. What is a material quantity variance and why is it important in the process? What is a labor variance and why is it important? What is a price variance and why is it important? And then you can try to understand how to calculate. Taking those steps really makes this chapter a lot easier to understand. So, material variances, quantity variances, and price variances will be the most important aspect of your budget, but understanding what a budget is, how to differentiate it between a static budget and a flexible budget, and doing the mathematics to determine what the variances are, specifically materials, price, and quantity. Labor variance is also a consideration, but again, as I mentioned before, when we're creating our budget and we want to know why there is a difference between what we budgeted and what actually happened, that variance should be explained. That's essentially what we're doing. We're trying to identify those variances and be able to explain them. And the variances are, again, labor variance, material variance, and price variances. Why is it important to us? Why is there a difference? What happened and what do we need to change? And again, with overhead, it's the same thing. I would say for all of you that variances should be identified and explained. Why did our budget differ from what our actual is in terms of our overhead, in terms of our direct materials, and our quantity of material purchased? And basically what happens when we determine these variances, we want to be able to determine if we're efficient in our production or we're inefficient. And again, these are very, very specific type of reports that organizations will need to have prepared, because it's going to determine whether or not that department is actually pulling its own weight. I mean, is it a cost drain to the organization? Is it helping us be more profitable? Is it helping us be more efficient? So these are very important questions that these types of variances will help us determine and correct if necessary. Not all variances are unfavorable. Some are favorable and should be explained, because we want to keep that up. We want to keep doing that if it's going to give us our variances. Give us a positive variance. Explore reasons for variances. Why? Investigate why. And I would say in this particular slide, what's most important is it significant? and an organization will determine their level of variances. When I'm working on my budget variances, immaterial variances I identify, but I don't investigate. They're not worth the effort. If I have a variance of 1% when I'm trying to recalculate or recompute our revenue for a period of time and it's off by 1%, I'm not worried about 1%. But when it's 4% or higher, I investigate. I find out why that variance exists and what I can do to avoid a variance that's too high, meaning an unfavorable variance, particularly. If it's a favorable variance, I want to explain to the board why it occurred. Not that it's a bad thing, but it's a good thing. But still, variances that are significant, favorable or unfavorable, should be explained. So you need to explore the variances. So in this chapter, I would say to you, the 5 things that I think are most important for you to grasp is the types of budgets, why they exist, why they are important. Then the next will be, how do we prepare a budget variance or a flexible budget? What are the components that we're looking for? We're looking to determine price variances, quantity variance, material variance, and also overhead variances. And then finally, I would like for you to understand the reasons why their variance exists. If it's a favorable variance, if it's unfavorable variance, and what is that threshold in the case of what is the materiality of that variance, and explore the reasons for those variances. In this particular lecture, I will not go into all the details of how to compute. I want your textbook to help you with that. The most important thing is to get the concepts and then understand the concept, apply them to scenarios, and then work on the computations. As always, I do appreciate your time, and I hope that if you have any questions, you do direct them to me. As always, thank you very much.